What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It is Black Friday. It's the day after Thanksgiving, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. Now, as you can imagine, shortened week, shortened trading week, holiday week, somewhat light on the news, although we've got a full schedule of news that we're going to get to. But we also have a lot to talk about as it relates to the Trump administration as we continue to get his nominations for key cabinet positions, including the FTC potentially and the DOJ. And spoiler alert, it might be Lina Khan 2.0 coming to the Trump administration. We'll talk about that and more on today's show. Let's kick things off like we always do, though, with Meta Platforms. Start of the week at 566, and I saw rumors that Mr. Zuckerberg made a trip to Mar-a-Lago, and he's trying to cozy up to the incoming president. We'll see if that ends up being true. I didn't see any visual evidence, but I saw multiple news outlets reporting Mr. Zuckerberg made a trip to the great state of Florida as Meta Platforms up 1.3%. You want to see this technically later in the show to 574. Like we said, Trump is considering some really tough antitrust advocates. This is for the Justice Department, the DOJ. We've also got a FTC commissioner potentially taking over for Lina Khan. Both are big tech critics, and both will likely be relatively harsh on these companies. Now, we'll see where they come down on the harshness. Do the Republicans and the Trump administration, do they want big tech to just do what they want them to do and maybe not censor Republicans or, in their view, conservative voices as much as they did? Or are they going to be pushing for the breakup of these companies, breakup of the ad business and ad tech business, breakup of Google Chrome, continue that investigation like we talked about on last week's show? This all remains to be seen as these picks get finalized and come in. I'll do a deep dive on all of them, probably in the newsletter. We'll talk about it a little bit here on the show, but it's a better thing for kind of a newsletter. And so make sure you're subscribed to that. Links down in the description below to the newsletter. It is free of charge. Now, Google, Meta, is going to request, this was earlier in the week, so they were going to request Australia delay a bill passing inside of the government inside of Australia that would, quote, ban social media for children under 16. Well, they didn't get their way as Australia passed a social media ban for any kid under the age of 16. This includes accessing platforms like TikTok, Facebook and Instagram, Snapchat, Reddit, and X. Now, it does exclude some companies, including Google's YouTube and WhatsApp and other messaging apps. The Australian government is trialing some age verification system, and they're going to try to determine how they keep kids under 16 off of social media. I've got news for you. The best way and the easiest way to keep kids under 16 off of social media is make the parents want to do that. If your kid is under 16 and spending more time on social media than other things, that's your fault as a parent. It's not Meta's fault. Now, Meta's going to face an FTC trial in April. We've got lots of trials coming for these companies, and that's over. This is one, look, some of this antitrust stuff, some of these trials, it can go either way. We know it's going to get tied up in appeals. It'll probably end up kind of being half good, half bad for the company. These type of things I absolutely hate, because Meta is going to face an FTC trial in April over WhatsApp and Instagram acquisitions. Not the fact that Instagram and WhatsApp are doing something now. We're going back and trying to revise history when Meta at the time paid a huge sum for Instagram. Many investors and many commentators thought they way overpaid for that. Same thing for WhatsApp. I think it was like a 13, 14, maybe even a bigger valuation than that. They acquired this company, and I remember Wall Street went absolutely nuts saying, what is Mark Zuckerberg doing, spending billions and billions of dollars on WhatsApp, which most people in the United States hadn't even ever heard of. Now we're going back in time and trying to turn around the acquisition. Doesn't make any sense. If the acquisition goes through, you have to live with the consequences. And so either as the United States or the FTC, they have to block these acquisitions. I just don't agree going back in time and trying to have revisionist history with these type of acquisitions. Now, Meta is planning to build a nearly 25,000 mile undersea subsea cable that would cost $10 billion. When you got things like Starlink and other types of ways to transfer data, I don't know why we need a cable that runs literally kind of coast to coast, or actually around the world. Actually, this is not just coast to coast. This is around the world. Why do we need a cable under the water? I don't know. Meta is going to use this type of thing to transfer data around the world. They will have exclusive access to this since they would be laying the cable. Company hasn't outlined any of this on their CapEx. In fact, this is just a rumor. But I tell you what, if they announce this $10 billion, you probably have some undersea copper cable companies that'll probably benefit from that type of spend. Moving on to Apple. Start of the week at 232. I had dinner last night with somebody that actually works with Apple, actually works at Apple, works at the headquarters. And he said, Tim Cook is an evil man. So more on that discussion maybe another time. But Apple started the week, like we said, at 232, and Tim Cook's evil company up about 2% to finish at 237. Now, Foxconn is the manufacturer of all the devices that Apple makes. They expect its global footprint to mitigate some of the Trump tariffs, as we'll get to that later in the show as well, as you have President Trump kind of waving his finger of these planned tariffs, including levying a 25% tariff on all products from Mexico and Canada, and an additional 10% tariff on all products coming from China. Foxconn, for its worth, has a lot of facilities around the world, and so they might be exposed to some tariffs, but they might be able to get around some of the more heavy ones if they get put into place. I actually think Apple has more problems in China than tariffs, and the fact that the Chinese phone market has shifted away from them. And China data shows that its smartphone plunged in sales in October by 44%. This is just foreign branded smartphones. It just seems like the market inside of China has shifted to the domestic providers. I don't know why that is. Maybe it's pricing, maybe it's software, maybe it's just kind of a country pride thing. I'm not exactly sure, but there definitely seems like a shift in China consumer behavior. At one time, they really desired the iPhone, and this time they don't. Part of it is the fact that a lot of Apple's features, at least in the more current phones, they're basically releasing the same phone every single year, but the software has changed a little bit, and the Apple Intelligence isn't being rolled out in China because they need to partner with a local firm in order to launch AI there. Obviously, inside the country of China, you need to have models there that go along with the Chinese Communist Party and the government, and so you can't launch an AI model there that would necessarily tell the truth about what's happening there. So Apple is battling with that, while as domestic providers, they're already kind of linked up in those types of things. They know the regulation, they know the country, they know the rules, and look, they're getting around a lot of the issues that Apple is facing. Now, moving on to Amazon. Start of the week at 201, and on Black Friday, we didn't get a sale on Amazon shares as they were up 3.2% finished week at 207.89. Now, Trump's tariffs, like we talked about, could cost annual American spending by about $78 billion. Again, he's proposing 10 to 20% tariffs on all imports. In fact, a higher rate of 60 to 100% tariffs on Chinese imports. That would be a lot of the stuff coming. That would basically shut down Temu and whatever other Chinese mall sites that are operating here in the United States. He has also proposed a 25% tariff rate on Mexico if the country did not enact stricter border regulations. I didn't bring up the tweet, or I guess it comes from True Social these days with Trump, but it sounds like he already spoke with the president of Mexico, and she basically agreed to shut down the border. And so here's the deal with Trump is he's going to say 10 to 20% tariffs, 60 to 100% tariffs. Some things are going to get put in place. I think certain products certainly will get tariffs. It might be even temporarily you get one of these large 25%, 10% tariffs across an entire country, but eventually those things will get worked out. These are all negotiation ploys. Remember, President Trump is super transactional. If you go up to Trump and you say, hey, you're a great president, I love you, blah, 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 all of a sudden he's going to fall in love with you. If you're Mexico and you say, hey, we're going to shut down the border, we're going to do this, we're going to do that, then he's going to relax his terms on this 25% tariff. But this is what he does to get you on the call to answer the phone and negotiate. And I think China is going to be slightly more complicated negotiations as the two countries are intertwined even more from an economic perspective. I can almost guarantee that Trump will sign an executive order putting a 10 to 20%, maybe even 60 to 100% tariff on all Chinese imports, he'll probably give it like 180 days to go into effect, and it'll essentially give him and the country of China to negotiate something within a 4 to 6 month period. And if it doesn't get done, then yeah, you're going to have massive tariffs put into place. This will create big instability. It'll create a lot of tensions. It'll create a lot of media buzz. And that's exactly what we want as investors, as the threat of a 60 to 100% tariff will misprice a lot of stocks. And if you know what you're doing and you keep a level head, you're probably going to make a lot of money. Now, AWS launches a new Quantum Embark, which is really just kind of a software feature, it sounded like, on AWS. And these quantum computing stocks, there's several of them. They're more or less penny stocks at this point, but they blasted off really over the past couple of days. I think these babies are up nearly 100% or more, as again, we're going to move into the quantum computing phase of the hype cycle. And whether or not that comes to full fruition or not, we'll see. Now, again, it is Black Friday. I saw several data points on Twitter and other places. It looks like we've got a really strong Black Friday. Now, I am hunkered down at home. We drove around the corner, got a Christmas tree. That's it. We're not going to the Targets and Walmarts, but I can imagine you drive by a shopping mall and it's probably pretty packed. Moving on to Netflix. Start of the week at $8.89, basically flat at $8.87. Netflix laying low and chilling. Not a lot of news out of Netflix this week. Moving on to Nvidia. No slow news weeks for Nvidia ever, as the chip giant started the week at about 140, down about 1.38%, finished the week at $138 per share. Actually, it's down 1.63% to finish the week at $138, if that wasn't confusing enough. Now, look, we have a lot of stuff to talk about from a political angle. Some of you guys can't handle it, and that makes me excited as an investor. There's some people out there, some of you are watching, some of you are now tuned off, but if you are still watching this program, understand there is a decent percentage of investors that can't handle talking about Trump, can't handle talking about the government, are so butthurt over the election results that they can't even pay attention to politics. As investors, that should make you so excited that a portion of the investor base literally can't keep their head on straight to analyze this stuff. So we've got more restrictions coming, this coming from the Biden administration. We've, again, got another maybe 2 months left of the Biden administration to be able to do stuff actively from an executive order position. And he is targeting now high bandwidth memory, something we've talked about here, but also on the Semiconductor Show. Links down in the description. We'll talk about this more this weekend as well on the Semiconductor News Show. But high bandwidth memory goes on all of the Nvidia chips. It surrounds all these AI data center chips, including AMD's and Intel's. In fact, there's no alternative to the high bandwidth memory. And these export controls, which control the high-end Nvidia chips, the AMD chips, Intel chips, those export controls are now going to be passed along to high bandwidth memory. This obviously impacts companies like SK Hynix and probably Micron, to be the most specifics. Now, Taiwan Semi founder, though, before he retired, offered the CEO job to NVIDIA's Jensen Huang, who listened to the job pitch for about 10 minutes and then politely told the man, "I already have a job." And he's doing a pretty good job at it. Now, we got Dell results earlier this week, like I talked about on the Equity Empire channel. We went over Dell's results. It's a little bit lumpy. I also went through the Dell's conference call. They seem to really indicate extremely high demand for Blackwell. I think most of you tuning in already kind of realize that. But as you go through the Dell conference call, it's clear they have a lot of customers that are just waiting for the Blackwell to be released. Instead of pushing forward with H100s and a build out of that, they are waiting for Blackwell. And so that impacted Dell's results in the most recent quarter, probably impacted them for the upcoming quarter as well. But as we move into next year, probably the spring and summertime, when you get full production and full release of Blackwell, well, Dell's results will probably be relatively decent. Now, moving over to Google, start of the week at 167. And on the heels of the DOJ trying to break up the company was up about 0.74%, finished the week at 169 or so. Now, Trump is looking to appoint an AI czar to oversee AI policy efforts. Now, Elon Musk, close friend, I saw him eating Thanksgiving dinner with the Trump family yesterday in Mar-a-Lago. Tell you what, he is erected permanent residence there in Mar-a-Lago. Well, he is not going to be the AI czar, but you got to imagine that Elon Musk is going to have his fingerprints all over this. And obviously, he has a terrible relationship with OpenAI. He has a mediocre relationship with Microsoft as kind of fallout from OpenAI. He has a mediocre relationship with Google. And so we'll see who this AI czar is. And again, when we get to the Tesla segment, he has hitched his wagon to President Trump. And in some ways, it is probably going to pay off pretty big for him and for the rest of these companies. That is why you have rumors of Mark Zuckerberg and some of these other executives wanting to hitch their wagon to the Trump train as well. Now, Google has asked an appeals court, obviously, to throw out the Epic Games App Store verdict. This verdict allows companies like Epic Games to set up their own app store and not have to pay the, quote, tax that Google and Apple apply to every purchase that flows through those app stores. This came in the Ninth U.S. Circuit Court of Appeals. Tends to be somewhat of a liberal court, but after the first Trump administration, the Ninth Circuit is not nearly as liberal as it was. But I don't think that really matters necessarily in cases like this. It tends to be more like Second Amendment cases, maybe even free speech cases, social justice issues. These types of things, it's actually tough to see how the court sides. Typically, though, the courts out here are pretty favorable to these large corporations. And again, I always bet for the corporate lawyers versus the government lawyers, and we'll see where these things go. But remember, we're going to have a lot of court battles really for the end of time for these giant companies, but really over the next several years. And again, these things get tied up for a long time. And again, in the meantime, Google is going to be printing hundreds of billions of dollars in revenue and hundreds of billions of dollars in profits. They're going to be buying back hundreds of billions of dollars in stock. And so the status quo is these things are tied up in court. Not necessarily a bad thing for you, the shareholder. Now, Canadians' antitrust regulators, they're seeing how much money these companies got, and they said, hey, let's get a Google ad tech breakup. So we'll see how Google responds. I actually think it would be interesting if Google kind of proactively kind of gets out in front of these things, instead of battling these things out in court, not only here in the United States, but maybe you go to Canada, you go to the EU, maybe start to separate some of the ad business out or create ways to where there's more transparency and maybe more visibility in these types of things. We'll see if the company feels like it needs to do that. If they do that, it'll be interesting to see how these governments react. But I would like to see Google be slightly more proactive, especially in the ad tech breakup. For these other cases, I think it's a little less attack on the core business, but this is an ad company. And I would rather Google be proactive in their ad business, setting up different silos or maybe spinning off certain portions of this business into a new private company or even a new public company. I'd rather see Google be the decision maker there than a court or a government then force Google into something that they don't have full control over. And so I think it would be wise for Google to get out in front of these types of things before the government or some type of regulation comes down on them. Now, before we get to Tesla, we got to talk about Microsoft. Start of the week at, change this graph around, 420.81, up about 0.44%. Finished the week at 422. We'll talk about this technically as well. Now, OpenAI is sued by a group of Canadian publishers over copyright infringement. This company just constantly getting lawsuits. I think going forward, we're going to see more and more payment to publishers. And I think at some point, a similar phenomenon that happens here on YouTube, where you can post videos and you can make money. Now, you can't get rich unless you get hundreds of thousands or even millions of views here on YouTube, but similar type of thing for content. Instead of publishing these things maybe free on a blog, you might be able to publish your research and submit it to OpenAI and get a payment. I think those things not necessarily coming in the short term, but in the long run, when data becomes more and more popular and more valuable for these companies, if it's not already there. Now, we've got another FTC investigation, although this is not a formal investigation that has been announced, but the reports are this is coming soon. Lina Khan not taking any days off in the last months of her reign as the FTC chair. And I went over this on X a couple of days ago. Folks, if you're not following me on X, get over there and hit that follow button. I'd love to see you over there. It's the fifth big tech giant to face scrutiny over the past couple of years. It dates back to a couple of different things, but primarily the fact that Microsoft has a lot of software and licensing agreements with the United States government. And earlier this year, I think you had that CrowdStrike security breach, which was also tied a little bit to Microsoft. And the government's own Cyber Safety Review Board was slamming Microsoft's security culture as being, quote, inadequate. Now, some people have chimed in on Wall Street, including Wedbush, saying that the investigation is basically a, quote, not to worry or a nothing burger with Lena Khan leaving. But as I outlined earlier in the show, I wouldn't really jump to this conclusion that the FTC is basically going to be a rubber stamp for big tech and allow these types of things to happen. I think they're going to be a little bit more of a nuisance and a pain in the ass than people think. And as always, these things play out in a courtroom rather than typically in the government. And in a courtroom, as you know, the lawyers for Microsoft often win. Now, moving over to Tesla, start of the week at $359. This one was down a solid 4%. The finished week at around $345. Now, out here in California, the governor is planning to exclude Tesla from an EV credit. That is because President-elect Trump is planning to repeal the current $7,500 federal tax credit. And this federal tax credit, when you bought an EV, it used to be when you filed your taxes in April or May or whenever they do, you'd be able to take that $7,500 based on your taxes. Well, they changed the law where you actually get this $7,500 almost like as a cash rebate when you buy the car. So if the Tesla is $37,500, you would actually get $7,500 off the price of the car, and you'd only pay $30,000. Well, President-elect Trump is planning to repeal that. But the California governor is saying, well, no, we want to continue to incentivize zero emission vehicles here in the state of California, since I think they're planning to ban any conventional gasoline engine by, I think it was just a couple of years from now. I don't know how they're going to do that, but out here in California, they do a lot of things and they say a lot of things that don't make a lot of sense. But he is planning to give this instead of a federal tax credit, make it a state tax credit out here in California. But he is excluding Tesla, which is the only car maker that actually manufactures cars here in California in a giant Fremont factory. So there's a tad bit of irony there. But as a taxpayer and a resident here in California, I actually like this. That is because Tesla vehicles are extraordinarily popular here in the not in the United States, but here in California. And this $7,500 tax credit would actually come out of my pocket, the taxpayer. And since it would not apply to Tesla, it would probably be used less. And me as a taxpayer would be responsible for less. Now, Tesla's rally is tied to a relaxed regulatory environment. That is because if you've looked at the performance of Tesla stock really over the past couple of months, certainly since the election, it is absolutely skyrocketed. And it's tied to many people believing a relaxed regulatory environment, and also the fact that Elon Musk has not only the ear of the president, but he's literally sitting next to him at Thanksgiving dinner in Mar-a-Lago. Got a lot of risk on this one, but I think if you de-risk the full self-driving, which again, the company, I have full self-driving on one of my Teslas. I use it a lot. It's a great piece of software. Would I sit in the back of that thing and let it go? Nah, I probably wouldn't. Would I put my kids in the back of that thing and just let it go? Absolutely not. But that is not going to slow down Tesla. It's not going to slow down them getting regulatory approval. It's not going to slow them down getting money and revenue from that business probably as soon as next year. Now, Elon Musk's Neuralink company begins a study on brain implants and a robotic arm. I actually visited this startup last year where they're working on these robotic arms, and it was super cool. You can actually, let alone your brain, you can actually control a robotic arm just almost by like thinking about the movements through your arm. It's crazy. I actually tried on this thing and I was like moving a robotic arm on the other side of the room just by like thinking about moving my hand. It was crazy. So I can imagine if you implant these things in your head, certainly will be a big business. Also, I did a lot of study on the robotic arm business. People that need implants, people that need prosthetics is actually the proper term. This is a huge business. The ones on the market are super rudimentary. And the ones that have some advanced features, including movable fingers, these cost hundreds of thousands of dollars. And you also have insurance covering a lot of the costs, not necessarily on the higher end ones, but on the prosthetics that are on the market that are really rudimentary. They cost huge money and insurance are going to cover it. This is actually a huge business. And so Neuralink, if they can get into the brain implant controlling a prosthetic, that's a multi-billion-dollar business model. Now, xAI is on track to top $100 million in annual revenue, and it's planning to release its own standalone Grok app. So it's not just Tesla that Elon Musk has kind of a regulatory kind of clearance on with when it comes to the government. He's going to have clearance from his SpaceX. He's going to have clearance on AI. In fact, he might even gain an advantage in AI. I also saw a news report that xAI might work with Tesla, where xAI is going to get payments from Tesla for access to certain compute power and models. And boy, can imagine there'll be some lawsuits tied up in there, as you'll have related party transactions. So the CFOs over at Tesla going to have to carefully monitor those payments. Now, Tesla's AI bet, all the stuff that they have going on is laying the foundation for a $2 trillion valuation. That's according to Wedbush. If they get to that without splitting the stock, that would take Tesla up to about $700 per share. Moving over to the technical segment of the show. What did we do this week, guys? Again, short and trading week. But what is this, folks? That is a new higher high on the S&P 500. We've been saying this for a while now. Now, I didn't call the bottoms of this market, although I do have a video here on YouTube where I was sitting at the golf course and I was like, basically, you're a PWAD if you're not buying into this market. And you can read the comments of that video and they're like, oh, the Fed and inflation and this stuff. Eventually, you kind of get these things wiped out. Man, we have been making a series of higher highs and higher lows, and we've been saying, man, you got to buy the dip on this thing for a while. Same is true here. At some point, it'll be a major dip, but you still got to buy these things because that is the pattern that is happening. Now, Meta found some support down here at about 553, this is interesting though. We had a high here, lower high, call that another lower high. If this cluster breaks lower, you're making a series of lower highs here. Also confirmed a little bit though, low, lower, low, lower, low. So this one actually looks like to me that it probably wants to break lower. That is a good thing. You have the longer term trend, or I would say kind of an intermediate trend. This has kind of been intact since like 2023 or so. This purple line, I still think we come back here. Now, maybe we just kind of walk sideways and we get there. So at that case, you're not getting this one at a much lower price. But if you do break lower more rapidly on this one, I think we've said it for a while. Anywhere south of 500 is a big moment for Meta from a buying perspective. Now, Apple has just confirmed, maybe for some people, this would be like a triple top. This is good enough for me, confirming a new higher high on this one. Company's got to be in here buying their own stock back, but this one's in a beautiful channel. We probably have way too many technical lines on this one, and we can kind of just delete them and just show you here, even this green box. Most of the green box I had in here, we're so far away from those. But here's you are with Apple. You're at the top of the range. You're probably looking to get back into a middle channel buying opportunity. If it happens in the shorter term, anywhere down into the 220s or lower should be a good buying opportunity. Amazon created a new higher high here. Found some support close to this bottom of the channel. Anytime you approach the bottom of the channel, in fact, anytime on a company like this, any channel like this, you can actually divide it in half anywhere below the middle of the channel. It can be a buying opportunity, and the same is true for Amazon. Netflix has gone parabolic. Anti-gravity, when you break over the all-time highs, you're waiting for pullbacks in these areas. Retest either the top of the channel or further back. That would take you back into the 700s with Netflix. Nvidia's in a buying zone. That is because the intermediate channel trending back to 2022 has held like clockwork for 2 years. In fact, over 2 years at this point. here you are with Nvidia. That is where you step in and buy. Oh, let me just point this out with Nvidia. If you're in an account, some of you guys just cannot see your account go down, or the minute your account goes down, you come to my video and you start blaming me for the stock going down. Well, you have a stop loss on this one, probably at 130. You buy it at 138 and you risk $8 to move all the way back, bare minimum back to kind of the middle of the channel retest. So you got $20 in upside and potentially all the way back up to the top of the channel. I mean, that goes off the chart, but a new higher high on this one, which you would plan on this technical pattern holding. If you bought at this level, you probably have $20 in upside, and you could set this one up for like any amount of downside. Really keep it tight. You could risk like $1 or $2 on this one with the upside that you make a new higher high back into the 150s, maybe 160s. Moving on to Google, still trying to find, at least in the shorter term, a technical pattern that works on this one. I think you still revert back to the longer term trend as this purple line's been holding forever. Still somewhat over it, but in my opinion, we just confirmed a new higher high on this one. In the shorter term, you have created a new low, but I wouldn't be worried too much about this one. Further weakness in Google, that one gets exciting. I have been buying Microsoft, just kind of nibbling on it, multiple accounts, longer term account where I don't plan on selling, and in shorter term accounts where I'll take shorter term profits on this one. Been buying it as we've approached. I'll change this green line to like maybe an orange line as it's approached that area, kind of the top of a buying zone. I have been buying Microsoft because your hope is that you make a new higher high, at least back up into here, into the 450s, let alone a new all-time highs all the way back into the 480s. So you got like $60. You could set this one up, $60 of upside with like $13 to the downside. I mean, like 5-to-1 risk to reward. Tesla still looking absolutely beautiful. You're still in this channel. You're now consolidating at this higher range, which means we are holding these prices. You've got extended volume. Wouldn't really pay attention to this week's volume. You're looking for a breakout with Tesla, not necessarily in the shorter term. You could come down here, retest areas at 315. That would be a buying opportunity, but then you would want to continue reacceleration back up in here to the $400. You start retesting 400 with Tesla. You're looking for that breakout above 400. It'll start looking like Netflix or Palantir or Bitcoin or all the other altcoins that are just kind of broken out 90 degrees. That's kind of what you're looking for with Tesla. Whether or not that happens with this company remains to be seen. It's had an incredible run just since April. You were down here at 140, and now you're sitting here closer to 340. So it's been an incredible run with this one. We'll see if it continues. Now, that was the FAANG Stock recap show for Friday, November 29th. Hopefully you all had a wonderful Thanksgiving. We're now on Christmas watch, just about a month away, I guess, less than a month away. Get those Christmas lists filled out. Make sure you tune into the Semiconductor News Show. That'll be later this weekend on the Equity Empire channel. Subscribe to the newsletter as well. Both of those links are down below. While you're there, follow me on X, follow me on Instagram if you want to connect with me on LinkedIn. And I think I'm over on Seeking Alpha as well. I think I'm going to have to publish an article to Seeking Alpha here pretty soon to get a payment that they owe me. So got a lot of work to do. Hopefully you guys have a great weekend. Have a safe one. We'll see you again next week. Good luck with your investments.